Welcome to Vested Interest. This is Shane back again for the Stock Pick of the Day video. It is August 10th. Today we're going to take a look at one in the retail consumer, it's in the retail industry in the consumer discretionary sector, Tapestry. Let's jump right in. If you want to know more about this company, check them out, www.tapestry.com. That is their homepage where I pulled this information. That's www.tapestry. Now, Tapestry is a leading global house of brands. We unite the magic of Coach, Kate Spade, New York, and Stuart Weitzman. We build on our world-class capabilities, deliver boldly on our corporate responsibility goals, and leverage our strengths from financial power to digital expertise, all of this in the service of developing our people, growing our brands, and better serving our customers and communities. I'll be honest, I did not know anything about this company before I started looking at them today. Didn't even really recognize the name, though I do recognize some of their brands. Coach, I know my wife has a couple Coach bags, and so this is one of their brands. For 80 years, Coach has inspired the dreamer in all of us. As we write our next chapter, we're building on our heritage of craftsmanship and confident New York style to deliver a complete lifestyle brand for modern lives. So some quick rundown of the brand Coach: 4.9 billion in net sales, 945 directly operated stores, 10,800 employees, been around since 1941. So it is a pretty iconic brand. Like I said, I know my wife has a couple of Coach bags. They're not cheap either. I've heard of Kate Spade, but obviously these are all women's items that they would buy or you'd buy for your wife. So another billion-dollar brand here, 1.4 billion. At Kate Spade, New York, we design extraordinary things for the everyday. Our lifestyle brand offers something unique and universal. We're bold and optimistic and known for celebration. Joy causes a chain reaction. For us, it starts with our internal community and the values that guide everything we do. So some quick highlights here: 1.4 billion in sales, 398 directly owned operated stores here, 4,500 employees. Again, I've heard of Kate Spade. I don't know if my wife uses them or not, or buys their brands or not. I'd have to ask her. This one actually might be one, if you had some females in your life, you could ask them. Like, again, I know Coach, I've heard of Kate Spade, but this last one, Stuart Weitzman, I'll be honest, never heard of this brand ever before. Stuart Weitzman footwear has long been synonymous, and they do footwear, not any footwear I'm familiar with or that I've bought, so must be women's, has long, and it was when I looked on their webpage, you could tell, like I said, all of these brands are geared towards females and women in our lives, right? Has long been synonymous with a minimalist, sophisticated sensibility, timeless style, luxurious quality, and artisan Spanish craftsmanship. Our goal is to continue to be the ultimate shoe destination for high fashion, high function shoes that inspire women to shine with confidence. So these are all high end brands here as well. And this is the smallest of the three brands. Stuart Weitzman, 318 million in net sales, 100 directly operated stores, 800 employees. So 4.9, 1.4, and 318, 4.9 and 1.4 billion, and then 318 million. So 4, 5, 6, close to 700 billion in net sales, it looks like, between the three of them. Let's get into the breakdown and the fundamentals here. So the reason we are looking at them down a staggering 15.91% drop on the day. It was huge. So I thought we would take a look at them. Again, I was not even familiar with the company. Whenever I saw Tapestry, I actually thought that they, might sell blinds and shades, but I was completely wrong. And then I got to looking at them. So that's, again, the fun thing about doing research on companies. You do learn something along the way. But anyways, back to Tapestry.com, or Tapestry Inc., ticker TPR. Again, they are the consumer staple sector. This is a retailer here, down 15.91% of the day. Closed the day at $34.68. 52-week range as low as $24.53, as high as $47.48. So they are starting to creep back down to their 52-week low. Average volume is 2.8 billion. Today was 33. Big, huge sell-off on the day. A lot of volume. People dumping this one like crazy. Market cap 8.039 billion, a beta of 1.48, so they are more volatile than the overall market. I'm wondering if today's drop had something to do with that, but with that much volatility, they would probably be volatile on a day-to-day basis nonetheless. Price to earnings ratio very low on this one, though you'd want to compare this to their industry average. I'm not sure how other retailers fare in their particular, and they look like they're more on the high end side. So, what is some Ralph Lauren's or some companies like that on the more high end side, Louis Vuittons and that sort of thing, where are their PE ratios? You want to look at that. $9.42 per share, nonetheless, that would be what you're purchasing here. Earnings per share, EPS, is sitting at $3.68. That's, I believe, pretty good for a retailer, but again, you'd want to compare them to their industry average. That's pretty good earnings per share for a lot of companies, even outside the retail sector. Next earnings date, somewhere sitting around August 17th. For Dividend, $1.20. They are a quarterly payer. We'll see that here in a little bit. And they have a decent yield here at 2.83%. That's pretty good. Actually, ex-dividend date was June 8th. Looks like they paid out on June 26th, so you would be in line for the next dividend if you were to buy them now. Should be coming up here in the next month or two for the next ex-dividend date. And a one-year target estimate, at least according to Yahoo Finance, of $51.15. So they see some potential upside appreciation in the stock price and even a new 52-week high. That's what that would be there. Now, I like to look at dividend yield theory. So to do that, you'd get into the statistics and you want to take a look at their 5-year dividend average. And unfortunately, they are not listing their 5-year average here. So you'd have to look at it. Next best thing, you could look at their trailing annual dividend yield. That's 2.79. That's what it would have been their average last year. And you can look at their current 2.83. It is higher. So technically, that's not a 5-year average. But looking at what it was last year, it does speak to some undervaluation here, though not a lot. Looks like this one really, based on dividend yield theory, would be pretty close to fair value. Just again based on last year's trailing. You could do the 5-year average if you wanted to do the math, I guess, but they just didn't offer here. I'm not sure why. Now you want to get into financials and look at their income statement, their balance sheet. Are they growing in revenue? Are they growing in sales? How much debt are they accumulating? Are they paying down their debt? Are they issuing shares or buying back shares? There's a lot of good information on there, like income statements, balance sheets. But we want to look at growing free cash flow or free cash flow in general. And we want it to be growing because we want our dividends to grow over time. And to do that, free cash flow needs to be growing as well. So going back to 2022, 201 million here, jumped up in 2021 to 1.2 billion. Big jump up, actually. A drop from 2021 to 2022 is 759 million, and then it looks like if this is current in 2023, they're at 516. So with a quarter left to go, it looks like they might be pretty close to 2022. So you'd want to watch that and see how they fare the rest of the year here in 2023 to see if they get back to these 2021 numbers. Overall, though, from 2020 to 2022, there is growing free cash flow, even though it's not up in a straight line. Looks like it might be a bit of a cyclical business here. And with it being a higher end brand, some of these companies may pull back if we were to go into recession. So that is something to take it in consideration. You can see here, though, they are buying back, and that might be part of this big drop here, right? 2021, they didn't buy back any shares, but in 2022, they bought back 1.6 million shares. It looks like they're bought back about 1.1 million this year as well. So they are buying back their own shares. So that could take into account that drop down there. So overall, growing free cash flow from 2020 was what I was getting at there. Next up, let's jump over to stockanalysis.com. I always recommend more than one source so you can back check the information that you're getting is accurate. These are just two sources that I like. I'm not affiliated. Pick any sources that you like. There's a lot of them out there. I just like the way they give the information that's easy to digest. Now, on Stock Analysis, they have 13 stock analysts that have taken a look at this. They call it a consensus buy. I would, based on the numbers so far that I'm seeing, would potentially agree. The only thing I'm seeing right now that's next close to its 52-week low, the only downside is they don't really have a long track record to go off of for their 5-year dividend average that we could get off Yahoo Finance. But they have a low estimate here on stockanalysis.com of $36. It currently sits below their lowest estimate. So if it was to come back up, that would be a 4.23% increase in the stock price. They have an average estimate of $47.85. That would be a 38.54% increase. And they have a high estimate of $55. And if it was to come back up to that number, which is just a little bit higher than what we saw on Yahoo Finance at 51 and some change, that would be a 59.24% increase. All the while, if you were to buy them now, you could get that 2.8+% dividend yield. So far, all the numbers look pretty good. Very attractive, actually, right now. If it's I don't know much about the company. You'd have to do more research, but so far the numbers make it look so. I'd look at statistics here, and I like to look at return on invested capital and return on equity. ROE, return on equity, is sitting at 39.50. I like 10% or better, so this is 4 times as high as what I like. Very, very high return on equity here. Same with their return on invested capital. I like 10% or better. This is 19.60, so twice as high as what I like to see. Very good numbers all the way around on this one. Let's take a look at the dividend and what we can see from that. So low payout ratio here, 32.61%, very low on the payout ratio, very high dividend growth, 20%. Now, this comes with a caveat, and they do have a 5-year average, so you could do the math and find the 5-year average. I went back all the way to 2013. They were paying this 33 cents, close to 34-cent dividend going all the way back to 2013. Now, they dropped it in 2021. They dropped it down to 25 cents, and since September of 2021 they have been raising the dividend every September. They jumped it up to 30 cents here, and so I would assume if they're going to continue this payout increase year over year, which they have for the last 2, they will increase it again in September. Right now, this one looks pretty attractive. Looks like it's headed back towards its 52-week low. You might want to do a little more research on this one, see how they're looking for revenue. When I looked at the numbers real quick, their margins look very good. It looked like their projections for earnings per share growth looked very good. Overall, this looks like a pretty interesting company if you're looking for something in the retail consumer discretionary sector in retail. This one looks like it might be worth taking a look at. This is the vested interest stocks. We're going to go ahead and pause this, getting a little long in the tooth on this video. So pause this and take a look at it. This is how I look at a company on a high level. Also how I set up the these overall videos on a day-to-day basis. That is it for this one. Trying to find value in the market, kind of up and down the last couple of weeks. This one looks to be fairly attractive. Let me know if you own this company. What do you think of it? Tapestry Inc. or Tapestry.com is where you go to find them on the webpage. Tapestry Inc. is the name of it. TPR on this one. Again, not one I had looked at before today, but definitely is looking like one maybe to at least add to the watch list. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, share stocks like this that we're watching, tips and tricks that we've learned along the way. I do personally read and respond to the comments, and I'm always interested to read your questions and or opinions. So if you've got suggestions for future companies to look at or stocks to look at in the Stock Pick of the Day series, go ahead and drop them down below and I'll work them into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and handles money. Should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice of a certified financial advisor.